Hello, Arnold. Welcome again. Let's wait a moment for other people to join. Mm, mm, mm. Welcome as well, Wes de Vries. Good to see you again. Um, mm, mm. Welcome, Lise and Kijos as well. What are we trading? Yeah, that's a good question. We keep an eye on BTC for potentially, like, this is the extreme demand where we already tapped into, but the way we are moving into it is a bit too aggressive. So I'm also not I'm looking for to see how this extreme demand does, because this could potentially be a model 2, where this was initially the first tap, this the second, this the third, 3 drive, and then this is the extreme demand. So if the model 2 plays out, it should be from here. But the way we are moving into it is pretty aggressive so far. Besides that, we could also take out the Asia low and then watch it more from like this local perspective, 1, 2, 3. But then I want to see like a very quick buyback. So this turn into a wick, and then it might be a long. If that does not happen, then I think we will follow that plan where we lose this range and go back to the range POC of this former consolidation, where we have multiple demand levels overlapping with each other. So this, what's gonna happen here is pretty important. Either we like react from here, or we react from the SFP, and then get a move. And if we get like a, let's extend the range. Oh, this is now, oh, this is now tapped. This is step 2. So yeah, like the deviation threshold is pretty low, so we cannot really work with that. But if we get like an aggressive move below, then I'm also not, if we get weakness on the bounce, it can also be a short towards these levels. But for now, I'm not really interested in shorting it here. More interested in looking for longs if we get a setup. Let's watch the 5. So we followed the plan by giving a bounce here into that supply and the range POC, where we once again had like a kind of a local 3 drive. 1, 2, 3 into supply. It was a hard one to trade because you only broke structure right here. But funny to see the 3 drive again into the supply and range POC. And then internally we have this downtrend, so from high to low, low, lower high, lower low. So this is our internal structure. So I have an alert right there. Beside that, we don't have really any structure in, let's put it a little lower. We don't have really structure in this move. So next alert is at the low, and then see what happens in between. So far it's, what I also said, like we had that ceasefire push, and then a lot of times people feel like missing out after this move, and then they start to go heavy into positions, especially yesterday with this move. A lot of longs entered in this exact move, and that is because people miss this move, and then they are so scared to miss the new move that they just FOMO in, just fully scared to miss the move. While 9 out of 10 times, if you get a big move, price then start a range, and people that go overly bullish or overly bearish, they get chopped till they scared to trade, and then we get the next move, either break down or the continuation higher. So you see once again that ranges are like impulse 10 to 20% of the time, and then 80% of the time you simply have ranges. So yeah, just watching what happens here in this local range, and let's see if we have some, what the order flow is. Welcome, Fuji. Good to see you as well. Okay, let's first look at the 30 minute. It's the most important one. We have the weekly VWAP below us. So if we retest it, it's in line with that potential 3 drive. And then I want to see reaction because that VWAP is around here. And beside that, we don't have any gaps or anything below us. The next big support is this naked point of control at 68.5, around 68.5. That's like the start of this impulse, so that is around here, which is also the value area low and the POC. So this is the next big support if we lose this upper range. Beside that, we still have the single prints above the weekly high right here, and also the daily POC. So in my opinion, still a reason to go for new weekly highs, but does not have to happen this week, of course. Can also be next week. And then on the lower time frame, open interest is pretty flat, not much happening. And yeah, CVDs rolling a bit over, but nothing too special. Not seeing anything too special. What I always like to see is either aggressive buying, which happened here. That happens at the highs or at the lows. Or see like increase in the indicators. So like yesterday, the short that I missed right there, I took the long and then missed this local short. But here you see that at the high, so we make a new daily high, open interest increases heavily. So that's a signal that a lot of positions are opening together with spot and perps and huge positive delta. And then if you look at the local structure, we had the 1, 2, 3 with a breakout structure. And then a lot of positions here are trapped if they get underwater. And you simply get like market structure and 1, 2, 3, market structure break, super clean short. And then the moment price goes below this level, all the positions that opened here, which like you can assume that like at the top 80% or so are retail longs, scared to miss the move. They get underwater, and then that's just like a snowball effect going lower. But not always you have that action. So right now it's a bit slow. We don't really see any spikes. So then we just set a alert at the low to see if volatility increases, because a lot of times, just like yesterday, we make a new high, a lot of people FOMO in. The same happens if we go to the low, because then a lot of people will also think, oh, this is gonna go down. And if you then see like a lot of shorts enter, because they think we go much lower, and then you see price stall and get like an SFP or a market structure break, then you can try to position against it. For now, yeah, just waiting, nothing to do. And yeah, spot is now also selling a bit. So then you need to have like clean structure confirmations. Then quickly looking at the gold is following the plan, where we first had like this range, then the aggressive move above, stayed within the deviation threshold, and now this is like the deviation, and price came back for the retest from 24-hour demand. But right now I'm looking mainly for a potential distribution, which could be either a model 2, depending on what price does. It can also chop around, maybe still come for the demand, where we can look for longs. And then it can either be a model 2 if we take extreme liquidity and then break structure. Then I'm super interested in 1, 2, model 2, and even more if we get like a nice liquidity curve. But the model 2 can also always turn into a model 1, where we make a 3 drive. So looking for that, but as you can see already, like the distance between the tabs is often more or less in line with each other. Where can I show that? Like from here to here is 6 days. And from here till here is 1 day. So if you calculate it to like similar, 6 days, right here, you can already see that it probably, if we get the model 2 or the model 1, it more or less will take some time till we get closer to here. And then perfect would be to get like this liquidity trail. And then if you get your structure confirmation, you can either trade the model 2 or the model 1. But yeah, if we look at it from this perspective, time to distance, what I always like to call it, like time and distance, it should be around, yeah, usually what gold does is, like here, this is on Monday, this is Friday, and then and in the weekend it's closed, so then you get to Monday, which is during the transition. So it wouldn't surprise me if we, into the weekly close, go higher, and then here the weekly close have, the markets close, and then next week we open on Sunday and then get like the manipulation move. But overall, super interested in gold, depending if we get the model 2 or the model 1. So I have some alerts ready. And for the long, I'm still interested in this 4-hour demand. Like here we have or what was it? Here, 6-hour. Super clean 6-hour demand with that imbalance here. So if we sweep these lows, fill that imbalance into that demand, I'm also interested in potential longs. Let's see if we locally have some structure. Yeah, I was looking this morning at this local range from low to high, but it was a bit sketchy with, yeah, not really tradable. You had like a 1, 2, and then yeah, like untradable model. So now looking for either higher or lower for new trades, and the same is basically true for silver, which is even cleaner, because this is already in a, or not in a confirmed model 1, or at least we do have structure here. So we have a structure break here. So this is technically already confirmed in a model 1 distribution. And then I'm super interested because the invalidation here is cleaner. And also if you look at how the third tab is confirmed or created, you have like, let's delete this. You have like a range. And this is almost too textbook. I just realized it, but like this is the third tab of the model 1, potential model 1. And they have high, low. If I sound a bit different, it's because I have hooikoorts in the Netherlands. I don't know how to what it's called in English, but like today and the last few days, it's horrible. So my eyes burn. I'm a little bit. My throat hurts. So it's. I hope it goes away. So if I sound like a child, that's the reason. And we have high, low. This move stays within the deviation threshold. So this is valid tab 2. And then a cold. No, not a cold. It's like hooikoorts. Like yeah. Do we have some Dutch guys in the chat that know? Let me quickly look at it. Hooikoorts in het Engels. Hay fever. Hay fever. I'm not sure if it should be. It can be only in the Netherlands, but pretty yeah, hay fever. Yeah. Like certain but yeah. Either way. Let's see if this was this it. So this did not sweep the former high, so it's like a local model 2. And did it structure? Yeah, but like overall, we have tab 1, tab 2, and then tab 3, and the tab 3 got created with a local model 2. So that's super clean market maker involvement. So then any retraces into that level, I'm looking for a model 1, the 3 drive, to go over into a model 2, where we go to the extreme supply, like structure break here, and then this is a super high probability short, all the way back to the range low, but you can target like the start of this liquidity trail with the demand below. And then stop loss, if you want to be safe at your third tab, because that's your protected high. But if you get the break of structure in this move, then you can also use that. But it can be like a 6R swing trade. So that's, yeah, a setup I definitely keep my eye on. And I want to look a bit deeper into it. What we have. So we have 6-hour demand, supply. And then I want to identify it a bit more. Here we have super clean imbalance. So this is also a liquidity level. Um, mm, mm. And let's see if we have some super refined levels. Alert there as well. No. This seems like it's just mostly liquidity and not really supply in it. Also not on the 3. On the 2, I see like here a overlapping. And like on the 1, it's too low, it's not really necessary. But here we have the overlapping effect, so that's what I really like. So then I put an alert at the start of that level. There. And then last little trick, a fib from the high to the low. Yeah, like, oh, this is amazing. The fib levels align with that overlapping supply. The only real imbalance of this major supply zone is this little 2-minute OBIM. So if we get a move, hopefully into here, tap it, then break structure, then that's like super clean short. Especially if this local liquidity also continues the way it is currently going. So I'm definitely keeping a super close eye on silver. And I like silver even more than gold. So, but yeah, both keeping an eye on it. Let's quickly look at the chat. Kijos, do you look at SNTs? I'm still learning about that, but there is ST with BTC and E now. Not sure if it's... I personally don't use it, but I know that a lot of people do use it. But yeah, I don't use it. And I also don't... I've dived into it a while ago, but I don't really see yeah, the added value to it. So I don't use it, but a lot of people will tell differently that it's super useful. But to me, it's not. I don't need it. Really hoping I get another chance with Xaxor. Yeah, I can imagine you want your revenge, but I think you will get an even better revenge if this one plays out. I've got alarms on those fibs. Yeah, me as well. And alert me if they get hit, because you know that I only get like 5% of my trading view alerts. The rest just disappears out of nowhere. Let's go to oil. Yesterday I mentioned how I was super interested in a sweep of the low for longs, but we just front ran it. And what I now see is like we had a nice wick fill. So often when you have deep wicks like this, price goes to the 0.5, like this, 0.5, right there. And then wick fills it for 50% and then moves up. So in this case, I could have, instead of waited for the sweep of the low, also could have paid more attention to it after filling the wick. So let's see if after the wick fill there was a confirmation. Only 2, for example. So like main structure is just start at this point. Lower high, lower low, lower high, lower low, fake break, lower low. So then eventually here was like the break, because you had this nasty fake break. So this was your bullish boss. And then here was demand, which got filled right there. Looks like a 3 drive. Yeah, it could have given a long, actually. It's not in the 0.7, I think. Close to the 0.7. So you have your bullish break right here. And then from low, high, pretty good retrace into demand and the fib levels, and then continue higher. But not a super clean entry confirmation. But yeah, why I was so interested in longs, or in the sweep of the low, was because of this liquidity trail. If you see this, then you can already kind of know, like, sooner or later, price wants to go there. It's like kind of a runway for price to go below it, get more fuel, get more fuel, get more fuel, and then boom, eventually it will go. And right now we are pushing higher. And also invalidating this model. I already said, like, we have big imbalances above us. So we'll be very careful with trading this range as a distribution range. And this is why. I wouldn't be surprised if this was the low of gold, because I already see when I go on X and the For You page, it's all bullshit again with Israel nuking Lebanon and the strait already closed and Trump already saying that he's just taking a rest before he will still obliterate Iran and stuff. So I don't trust that ceasefire at all. So what was it again on the Kijel shared it? Yeah, so if we look at the daily, we basically have like here from low up, high, higher low, higher high. And then this is daily SFP. So we did not close below it. And we perfectly wicked it. And this daily candle was no wick to the upside at all. Like just nothing. And that is super rare, and that does not stay like this. Sooner or later that will get cleared. So this is like a big magnet, that level right there. So let's make that red. And we wicked the market structure low. So technically, if you get like a local, we could rotate all the way back to the high right now. You have to take into account that we have a super big imbalance here. But market lost to fill those imbalances. Let's quickly look at, this is supply. And the FIP is probably, yeah, in this part. So this was the SFP. I think this will travel higher, so we can also look, like, can we join the trend somewhere? Oh, okay, so this is like the optimal reversal level. But until we get there, I think this can push higher. Like this was the start of the range from low to high. And right now price is breaking above it. So that means that this can be a potential range, initiation, mitigation, continuation. So horizontal at the high. And let's see if we have some demand already creating. Yeah, on top of that former range high, we have demand. So in case we get retraces, that's where but we are pumping as we speak. BTC going down. I'm gonna talk about this one in a minute, but motherfuckers front run me again. Let's see. So a retrace into this top of the range, this demand, which 3-hour demand, can give interesting longs. And besides that, what do we have? Yeah, prices, like demand is in control, fully in control. Refine this. Here we have demand. And now also creating demand right there. So also alert here. And like also local demand here. So yeah, locally it's super bullish. Maybe we can expect some news soon. At least that looks how the chart is trading right now. So yeah, let's look on backtests. I'm interested in longs, all the way back up to here. And this is basically nothing. So this is free air. There's So it can squeeze real hard because there's no supply here until around here. So that's oil. BTC is still at the same level. Hype had a classic 1, 2, 3, so exhaustion. Then it moved down, mitigating the top of the range demand, which was this level right here. Okay, there. So this was the market structure high. Perfect mitigation, then a bounce. And here you see that very often when you get a local tree drive, that is often the start of your new range. So here the third drive ended up being the range high of the new range, which is range high, range low. And right now I'm super interested in eventually sweeps of the lows into this demand, then for model 2 or model 1, and then for continuation longs. If we first go up, also interesting short, because we are building quite a lot of sell side liquidity. So overall, super interesting range to watch. So I have my alert at the extreme premium and extreme discount, and just playing this local range. Then going to Tau, the fucker, where I took this morning. Let's see. Like if we zoom out a bit, we had the bullish break right here, and then we had the retrace into the 0.7, and like you can backtest it, but how often the 0.7 is the low of like a high time frame trend. It's often when people think, oh, the higher low, it's too deep, but in crypto, it often gives like, and not only crypto, like a lot of assets, it gives that super deep pullback to eventually still give the higher low and then push up. But yeah, I played this wrong, where we had range low. And first I said like with structure, low, lower high, low, low, lower high, lower low, lower high, lower low. So at that point, and this is where your ranges, like ranges and market structure always flow over into each other. So a lot of people draw from here, they draw in a range, think, oh, we are trending down, so range low to range high, and then they see like a move above that range, and then they think, oh, let me short it because this is distribution. But what you need to keep in mind is that a range low, range high, at this point, this is your swing low, this is your swing high. Here you do not break your range low, so you basically SFP your swing low, which means that you go back to your weak targeted high, which is your swing high. Then if you get a strong close above, this means that you have a break of structure. And this is where your ranges flow over into market structure. So this was the break. So at this point, you have a break of structure where you can look for the higher low for a higher high. Higher low, higher high. However, my dumb ass had this invalidation. Like just, I think, yeah, it was at this candle. There. And I also drew in the Discord in my server, literally the move below my stop, and then continuation for the higher low, for the higher high. And that is literally what happened. Took me out and then it reversed higher. So that's just a execution, wrong execution for myself, because I knew this could be the 1, 2. This can take extreme liquidity into extreme demand was already mitigated. But because we also broke structure back to bullish, you can make a low